What's up, everybody? Welcome back to another Monday morning market data report. I am your co-host of the STR Investing Podcast, Mark Lumpkin, and this week we are bringing you none other than Big Bear, California. We're going to talk about Big Bear. We're going to talk about what amenities drive revenue, and we're also going to mix this episode up a little bit. So I'd love to hear back from you guys if you like this new style of format. We're going to give you a little bit more information. Hopefully it's not as dry. I've been playing with this Monday episode for a while, and I'm going to mix things up again. And so I want to start with a snapshot of Big Bear, California, so you can kind of understand the data that we're looking at and what the overall market is as well. I think this will be super helpful. So let's kick things off. Starting with supply. There's a lot of supply in Big Bear. Between 4,000 and about 4,500 total properties, depending on the combination of the platforms you look at. I think the average they're saying is about 4,300 short-term rentals in Big Bear. 96% of them are entire home listings. And so there's very little shared inventory. Most of it, you're renting the entire house. The average nightly rate that we see, the ADR averages, depending on bedroom bathroom count, ranges anywhere from $230 a night up to a little over $500 a night, with an average of about $400. There are some high-end luxury houses that are going to exceed $1,000 a night, but those are going to be really, really luxury cabins that sleep a lot of people. The kind of the mid-range is about $400 a night for Big Bear, California. Occupancy is very seasonal. So the average occupancy annually, according to AirDNA, is about 40%. Those range between 28 to 50% depending on the season and the individual property. The seasons are really, really interesting. So most of the bookings come in the winter ski and snowboarding season. You're going to get a lot of holiday travel, Christmas, spike at New Year's. We then see a second peak season in the summer where people are boating, fishing, kayaking, going on family vacations. And we see some really big spikes in occupancy and nightly rate during certain events. There's going to be that Oktoberfest out there, other festivals and wedding event, kind of wedding seasons. And then we're seeing a lot of weekend traveler. We'll dive into that. Those average revenue benchmarks on an average, on a median annual revenue, is about $58,000 to $65,000. Remember, there's huge discrepancies in that depending on bedroom bathroom count. We did an episode previously where we talked specifically about revenue based upon bedroom count, but that's kind of the average, about $58,000, $60,000 a year as a revenue benchmark. And then where are people coming from? People are always wondering, why are people traveling there? Almost all travel to Big Bear, California is coming from California. It's coming from Los Angeles Metro, Orange County, and San Diego. People are almost always booking short stays, weekend heavy, 2 to 4 nights, and they're almost all traveling. So that's where your guests are going to be coming from. Major cities in California, they're going to come for the weekend and then they're going to leave on Sunday. Listing growth has steadily increased year over year at over 8%. And so there are a lot of people that say it's saturated. We know the data tells us that great properties are never oversaturated, but in general, there is a lot of listings in Big Bear, California, and that continues to grow year over year. Most listings are 3 to 4 bedrooms. There are some properties that are going to have a higher bedroom count and some smaller ones, but the average is 3-4 bedroom houses, and then you're an outlier if you have a 5 or a 6 bedroom. Most properties can only accommodate 6 to 10 guests. Our theme always is the bigger the house, the more guests you can attract, the less competition you have. That reigns true in Big Bear. And then here's what the data tells us on amenities specifically. Hot tubs. 59% of the top performers have hot tubs. Those houses with hot tubs make $14,000 a year more than houses without hot tubs. So clearly that's a great amenity to have in Big Bear, California. Fire pits. 48% of top performers have fire pits. Those houses with fire pits have a $3,600 a year revenue increase. Probably worth it. You obviously want to check with insurance. Big Bear is one of those markets that you want to be really safe and cautious when you implement a fire pit. Game rooms, only 29% of top performers have game rooms. They lead to a $14,752 a year increase in revenue. Only about a third of those top performers have it, so that can definitely be a way to stand out, is to get you a game room. Saunas, a huge revenue increase because only 2% of the top performers have saunas. I would assume that this data is telling us that sauna hot tub combination always coincide, because they're telling me that you're going to make an extra $38,000 a year if you have a sauna. But that's obvious because houses with saunas are going to have a lot of other things that the houses without them don't. And then waterfront properties, less than 0.5%. So less than 1% of top performers are waterfront. Those waterfront properties are generating about $25,000 a year in additional revenue. Very, very small percentage of people have waterfront properties. Very small percentage of people have saunas. And then your big amenities, your fire pit, your hot tubs are going to be well over half. So there you go, guys. That's what the data tells us. Hopefully this was a good snapshot synopsis of what the market looks like in Big Bear, California. Everyone's driving from LA for the weekend. There's a lot of properties. Most of them are the 3 to 4 bedroom count. There is not a lot of heavily amenitized properties. This is a pretty small percentage that have things like waterfront or things like saunas or things like game rooms. So there's certainly a way to stand out. Love to hear from you if you guys like this new format, if you like this snapshot of the market before we dive into the data. And guys, we'll catch you this Friday for another guest speaker. We're going to crank this thing out, man. We're getting back to it. We're bringing you guys more episodes every week. We're going to bring you some super interesting guests, and we're going to expand our reach beyond just short-term rentals and start really talking about some different hospitality channels that you can leverage as an investor. And if you guys need anything, reach out. Thanks for listening to the pod. See ya.